With just a few dollars, you could start building wealth that grows over time, effortlessly, like planting a tiny seed and watching it turn into a towering oak. Sounds like a dream, right? Well, that's the power of investing in the stock market. Today, I'm going to show you exactly how you can start investing with just a little bit of money and why it could be the smartest decision you make for your financial future. So grab a notebook, because we're diving into the basics of stock market investing and how you can begin your journey to financial freedom. First things first, let's demystify the stock market. Think of the stock market as a giant marketplace where people buy and sell ownership stakes in companies, known as stocks. When you invest in a company, you're essentially buying a piece of that company. The value of your investment can go up or down depending on how well the company performs and the market conditions. But don't let the term stock market intimidate you. Investing in stocks doesn't mean you have to be a Wall Street wizard. With some basic knowledge and a bit of strategy, you can start building a portfolio that works for you. Before you dive in, it's crucial to set clear investment goals. Are you looking to save for retirement, a major purchase, or just grow your wealth over time? Your goals will influence how you approach investing. For example, if you're saving for retirement, you might want to invest in a mix of growth stocks and dividend-paying stocks. On the other hand, if you're saving for a short-term goal, like a vacation, you might focus on safer investments with lower risk. Having clear goals will help you stay focused and make informed decisions. Think about what you want to achieve and in what time frame. This will guide your investment choices and risk tolerance. Investing always involves risk, but understanding it can help you make smarter decisions. Generally, higher potential returns come with higher risk. Stocks can be volatile, but they also have the potential for significant long-term gains. It's important to assess your risk tolerance. How comfortable are you with the possibility of losing some or all of your investment? If you're risk-averse, you might prefer more stable investments like blue-chip stocks or bonds. If you're open to higher risk, you might explore growth stocks or emerging markets. Remember, the goal is to find a balance that suits your financial situation and goals. You don't need a fortune to start investing. In fact, many successful investors began with small amounts of money. The key is consistency and patience. With modern apps and platforms, you can start investing with as little as $5 or $10. One popular way to start is by using a brokerage account. Many brokers offer low minimum deposits and allow you to buy fractional shares, meaning you can invest in expensive stocks like Amazon or Apple without having to buy a full share. For beginners, consider setting up automatic contributions. By investing a small, consistent amount regularly, like $25 a week, you can build your investment portfolio over time. This strategy, known as dollar-cost averaging, helps mitigate the impact of market volatility. Now that you're ready to invest, how do you choose the right stocks? Start by researching companies you're interested in. Look for companies with strong fundamentals, healthy balance sheets, consistent earnings, and a solid business model. You can use financial websites, news articles, and annual reports to gather information. Pay attention to key metrics like earnings per share, price-to-earnings ratio, and dividend yield. Additionally, consider diversifying your investments. Don't put all your money into one stock or sector. Diversification helps spread risk and can enhance your chances of achieving steady returns. For beginners, it might be wise to start with exchange-traded funds or index funds. These funds track a broad market index, like the S&P 500, and provide built-in diversification. Here's where the magic happens: compound interest. This is when your investments earn returns, and those returns start earning their own returns. Over time, this can lead to exponential growth in your investment. Let's say you invest $100 a month in a stock that earns an average annual return of 7%. After 1 year, your investment grows to $1,274. But the real magic happens in the following years, as your returns start earning returns of their own. In 10 years, that initial $100 per month could grow to over $18,000. The key to benefiting from compound interest is to start early and be consistent. The longer your money has to grow, the more you'll benefit from this powerful financial force. As you start investing, be aware of common mistakes that can derail your progress. One major mistake is trying to time the market, buying and selling based on short-term predictions. This can lead to poor decisions and potential losses. Another mistake is focusing too much on short-term gains. Investing is a long-term game, and it's important to stay patient and avoid making emotional decisions based on market fluctuations. Lastly, avoid investing money you can't afford to lose. Always ensure you have an emergency fund and only invest money that you're comfortable with potentially losing. Once you've started investing, it's essential to monitor your portfolio and make adjustments as needed. Review your investments regularly to ensure they align with your goals and risk tolerance. Rebalance your portfolio if necessary. This means adjusting your investments to maintain your desired asset allocation. For example, if your stock investments have grown significantly, you might want to shift some funds into bonds to maintain balance. Stay informed about market trends and economic news, but don't let it dictate your every move. Focus on your long-term strategy and make adjustments based on your goals and performance. Congratulations! You now have a solid foundation for starting your investment journey in the stock market. Remember, investing is a marathon, not a sprint. Start small, stay consistent, and watch your investments grow over time. If you found this video helpful, be sure to like, subscribe, and hit that notification bell so you never miss an update. Share your thoughts or questions in the comments below. I'd love to hear about your investment goals and experiences. Thanks for watching, and here's to your financial success.